Welcome back to another episode of Scale SaaS. I'm your host, Ali Jamal. And today we have someone whose journey represents a perfect blend of founder resilience, product innovation, and deep industry insight. Joining me is Chris Hussain, founder of RealKey, a platform that reimagined mortgage processing long before the industry was ready. Chris has worked across lending, fintech, AI-driven document automation, and even participated in Google's AI startup accelerator. Today, we are diving into what the future mortgage stack looks like and what he's building next. Chris, welcome to the show.
Well, thank you. Nice to be here, Ali. And please, Christopher, too many Chris's in the world.
Okay, so let's start at the beginning. Take us back to the early days. What pain points originally inspired RealKey?
Well, it kind of helps that I have deep industry expertise. I was the #1 mortgage originator in the US for 2 straight years, which means I did more loans than anybody else in the world for 2 straight years. I'm one of the only people to have ever held a license in all 50 states, but I am the only one to have ever originated, processed, funded in all 50. And so in addition to that, I've always had a technical background. When I was a top mortgage originator, I was the only one in the top 25, maybe even further than that, that was acting solo. So that means I was doing my own website, my own CRM. I did absolutely everything. And so, as I'm sure you know, as we were discussing earlier, you've been in fintech. And what's very unique in fintech is to find somebody with deep industry expertise that actually understands technology at the level that I do, where I've been acting as product manager, project manager, doing the UI, UX, the wireframing, mapping everything out, project management, you name it. The only things I don't do is I don't actually code, and then I don't do consumer-facing design. I'll do obviously the wireframing and whatnot. And so I was able to, given that background expertise, know what the gaps were in the technologies that were out there and know that I knew what I could build and the problems that I could solve and how to get to it, but I needed to build a team around me. And so that's really what inspired RealKey, to be quite honest, is just looking at the fact that when I was doing transactions as a mortgage professional and also for my consumers and everybody involved, communication was just garbage. I mean, everybody is I pride myself on my LinkedIn, I don't have a full voicemail. I actually check all my texts, my emails. I don't get back to everybody necessarily. There's a lot of spam in there, but most people don't. And email and phone is just inefficient. So I said, hey, why do we have all these disjointed systems? Let's go through and create something where it's a single point of truth. And I liked Slack. At the time, it had really been in its infancy, and said, why can't we have a Slack-like chat? We can't build Slack for every transaction, but what if we built the system so it made almost like a Slack for every transaction? And as people uploaded, why can't it recognize the documents? Why can't it tell you what they are? Add it straight to the conditions that it was meant to go through and to meet, and then even auto review it using calculations and algorithms and looking at guidelines and say thumbs up, thumbs down within seconds and have no humans in the loop. So that's really what inspired it, and there's a lot of legs to it too.
So you find a lot of chaos in the mortgage processing market, and you wanted to have a single point of truth, just like Slack. What was the exact moment when you realized that the industry need to be rebuilt?
Yeah, I mean, that's the thing is when it comes to fintech or most industries in general, is that you don't want to come in and start stepping on toes. There are entrenched incumbents for particular products and feature sets. I don't want to come in and start trying to boil the ocean either. And so what we very mindfully did, and this was thanks to Alan Tifford, who was on our team. He was the TurboTax design lead way back when. He came in and he said, originally we were more focused on the loan application, and still communication, bringing in all the parties was always part of it. But he said, let's really focus on processing and underwriting, documentation. You can tell me in a loan application what your name, date of birth is all day long, where you work, how much money you make, all of these items that go into getting a loan application started. But then you need documents as the fact checking to go through into due diligence, to go through it to de-risk the loan. So why are we focusing on the application instead of the documents? Technology is getting good enough. Why can't it fill out the loan application eventually? And that will, in 10 years from now, our whole concept is let's make the loan application obsolete. Let's get rid of it. And
Right.
so really that's where it all started as a foundation. We had to start somewhere and say, well, we need to play nice with the point of sale, with where you fill a loan application online, get a quote on. Right now, yes, you do upload documents, but it's all very manual.
Yeah.
And it's reviewed manually once it gets inside. And then when we play nice with the loan origination systems, fill their gaps too. They take the documents in. Why can't we be the technology behind it that reviews the documents and gives feedback immediately? Why can't we be the chat engine that fits into their system so they can all communicate and collaborate with each other? So that's really kind of looking at, you know, how you fit into an ecosystem.
Uh, so I want to peel back the curtain a bit. You have been inside the Valley of the Beast, lending, mortgage ops, fintech, fundraising. Uh, let's dig it out. What's a truth about the mortgage or fintech industry that no one wants to admit?
That the bulk of the people in it are not technologists, that
Uh,
it is a sales-oriented industry and everything is about sales, 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 and then really timeframes. Getting a loan done, you have a certain period of time for
mm,
purchasing a house, before things get done. You have bills that are due if you're doing a refinance, et cetera, et cetera. At the end of the day, those that are running it, we always talk about the old waspy white men, that are in the banking industry running it. Well, there's a reason that it's stuck, like it's Jurassic Park, because you have a lot of Jurassic people running it. And let's be real, the people who join banks are not joining banks because they think they're going to build some exciting technology. No, most of the time they're not.
correct.
You work for these Silicon Valley startups because you're doing something exciting and new and different. Now the problem is that once you do something exciting, new and different, you're not part of a bank. Well, you need to go through and you need to get traction and you need to get funding and everything else, and you need to build a world-class team. Well, that costs money and time, and a lot of the time, those that are in funding do not come from the mortgage or fintech industries, and they'll understand it. And what you have to also understand is it's also very cyclical.
Mm,
It's determined upon rates and what the market is doing, and especially what, I'll be honest, RealKey got stuck in is that we got stuck with COVID hitting and all the investors
mm,
running for the hills. That delayed a launch for us by about a year and a half and some funding. Then on top of that, we hit the rates when we did come out with the product in late 2020 one, I believe it was. It was 21 or 22. I can't remember off the top of my head at the moment. But either way, it was right before the rates went up. And basically, the rates went up, and all the investors that had overinvested in fintech and prop tech and
mm,
insurtech all went running for the hills and realized, oh man, all of our companies we invested in were actually mortgage companies or real estate companies in tech clothing. They weren't
right.
really, and that's because they just didn't understand. They're like, oh, these companies are doing great. Well, that's because they're marketing companies in a hot market.
Mm,
You build the pick and axis. So RealKey kept growing despite the market. And so that's the difficulty is that right now, when we look for investors in the industry, investors are waiting, waiting, waiting. They are followers. It's very easy to find a follow-on investor, to find a lead investor. Very
mm,
rare. Everybody's lemmings herd mentality. And let's be real, if they're following in their herd, they're investing too late. They're getting over valuations when they could have invested earlier. The companies that they were investing in could have gone through and really been at the top of the wave instead of swimming up it and ride
right.
that surf all the way on. And so that's what they really need to understand is that you want to invest at the bottom of the market and be a leader, not a follower. And so
Right.
that's the difficult truth about fintech is that you get stuck in these waves and crashes, and so
Mm.
innovation doesn't happen.
So, looking back at your journey, if you could teach other SaaS founders one lesson from your own company, RealKey, what it would be?
I mean, if you're talking specifically SaaS, that's a specific question. Is that the
Yes,
question we're asking?
yes, it's
All right,
specifically about SaaS.
This is a SaaS podcast, so makes sense.
Mm,
So specifically for SaaS, at the end of the day, I think it's something that it's dependent. If fundraising is your superpower, you
mm,
can have the proper resources and capital to build for enterprise first.
right.
I believe personally that depending on the industry that you're in, for instance, mortgage being it, it should be built for the mom and pop shops, for SMBs. SMBs, if you build it to where it is self-onboarding, where you don't need expensive integrations and vendor diligence and all of the typical requirements that you'll get going to a top tier bank to get their business and win their business, which yes, it's a big contract. Not only will you have consistent sales and growth, which can drive your revenue and your traction, which will drive fundraising, but you can also address 100% of the market instead of only a portion of it. And that's when you can really change an industry as a whole, is when you've built it to also be affordable for everybody in it as well. If only the large enterprise can afford particular technologies, well, you're not really changing an industry, and you never will, because it's going to be difficult to bring that price down because it was never part of your model to begin with. Um,
Right.
so I've seen a lot of companies get stuck too, where they get distracted by large clients, and that's one client. If you lose that client, and especially for me now that I'm doing advising, consulting, and investing, at the end of the day, if I'm looking at a company and they're doing great as far as revenue traction, and I look behind the curtain, I see there's one, two, three, seven, single digit contracts that's driving that. As an investor, I'm running for the hills because that tells me that they have one peg holding everything up, and if that peg moves, they're losing. I would much rather them have the same revenue with hundreds of contracts. At which
Right.
point, one leaves, two leaves, 10 leaves, they're still okay.
Right. Okay. So that's a very good tip as an investor. Okay. You have also been called a one-man accelerator.
Thank
What
you.
skills do you carry with you, no matter what company you're building?
Yes, I mean, one man accelerator is a unique term that I've coined. It's not copyrighted or anything, but I haven't heard it anywhere else. And I think that that's partially because at the end of the day, I do consider the skill set I have a bit of a unicorn. You don't find, as I mentioned earlier in the podcast, many cross-functional leaders. And even most companies that are hiring for, top tier leadership, that's what they're looking for, because you need somebody who can speak to all of leadership, to all of the different divisions, and to understand them, effectively. It's the same thing when I was doing mortgage. Again, one of the few people who could do processing, underwriting, who understood title and escrow, who understood insurance, who understood what the appraiser had to do, who understood the landlord, the employer, and everybody else's jobs and how they played into this and what their experience was like. So at the end of the day, when I'm talking to founders, I think it's very important. Founders are looking to replicate themselves, and the best founders are cross-functional. It's where they are looking for somebody who can walk into a room and be able to talk to everybody there. But I use personally, in addition to One Man Accelerator, I've coined the pitch deck first. Pitch deck first is very important, and it's not just, hey, you need a pitch deck. It's, for me, the pitch deck is the center for everything. The pitch deck is where I can run faster than anybody next to you. I need to learn as much as possible. I'm getting paid per hour for most of my contracts. And so every single 30-minute meeting, every 45-hour-minute meeting needs to be super efficient in how I communicate and how I also intake everything too. And so I look at the deck and I'm going through it quickly. I'm giving immediate feedback that's actionable. How do we improve on this? And most of the time, they don't want to hear about their pitch deck because they're like, oh, I've heard from every advisor, mentor out there. But what's unique is that I've won every pitch competition, from Alibaba Global to StarGrind Global to AI Global Pitch Summit, overseas, internationally, you name it. And so what I can uniquely do is I do have the respect when I come in, and they see immediately I'm poking holes very quickly. I'm learning from them where they're at and what they do and don't have, and then giving suggestions how they can go through and improve on their verbiage and how are they talking about the company, not just to investors, but to also their clientele. What they don't realize is that the investors in the room are not all from their industry. They need to dumb it down so that absolutely anybody walks into the room, no matter their industry, understands what you're saying very quickly. If you can do that, that's important, because even when you do have your champion for enterprise SaaS, that person may be technical and may understand what you're doing and may understand the value, but they may suck at going through and explaining that to the rest of their team that are the decision makers. And if they don't do a good job of that, they may be your champion, but they're not going to champion much of anything if they can't communicate that well, and they're going to use your materials to do it. Now, that leads into go-to-market strategy, which then leads into, okay, how can we go through and how can we cut through all the noise in a busy environment? How can we go through and if we have something new, explain it quickly, but then in sales and sales automation, overcoming objections. So let's start getting into sales and explaining what are the objections they're getting. How does that also start advising product-led growth, our prioritization of the product, maybe new features that we need to consider, And then this all leads back to, again, fundraising, culture building. I honestly think that every company should pitch every month to the entire team. That way, if you see everyone's heads nodding, we're all aligned. If someone's like,
Right.
wait, you're saying what? We're doing what in 3 years? I didn't know that's where we're going. Well, then you need to take them aside and have that conversation and get everyone back aligned. And I think that's super helpful. That's something we did with RealKey, something that, I think every company should do.
But do you find this kind of titles or positions across tier one companies, or is it something which you basically practiced when you were running, RealKey?
Yes, I mean, I think that it's for large tier company, top tier companies as well. If you're looking for, publicly traded companies, billion-dollar companies, I think that at the end of the day, these are some conversations, I'll be honest, I've been having lately too. And that is what they are looking for, and that is something that they've also realized is a gap that they have. If they have a leader that only understands their role and nothing else, when they start communicating with the other divisions, there's a disconnect, and
Hmm.
that's what slows them down. And most of the larger companies are looking actually for startup experience because they're
Hmm.
looking for, hey, if we go through and we cut your budget, are you scrappy? Are you able to do more with less, but still do world-class work? Now, obviously, there's still a lot of vetting involved with that.
Yeah.
So, yeah, I think that it's in general, it depends on, what you're doing, especially if you have deep industry expertise, that's going to help out as well.
Right. Okay, so every founder, and you're a very experienced founder, has one decision that they would love to revisit. What is the one decision you regret the most? And what would you do differently this time?
So, decision that I would revisit. I mean, that's a hard one, especially when you're doing a startup. There's so many, points in time where you wish you could go back, and hindsight's 2020. I think that obviously there was one particular thing that stood out to me was we went through a pivot and we had over $1 million from investors that had been wired to us right before we finalized that decision. And so they'd invested in a prior concept. Now they had invested, it was finalized. Had I gone back, I would not have returned the money. But me personally, what I did was I thought I was doing the right thing, and that's who I am, always honest. I called them up and said, "Look, I'd like to return the money to you guys. We're in the middle of a pivot. We may not be doing the same company that you just invested in. Still, we called the same, but it's going to be doing something different." Going back, I would have kept the money. We would have had that extra year during, when the market was hot, which we would have been doing our Series A, and everything would be very different with that 1 year difference.
Okay, so here's another one. If RealKey ever relaunches, what does RealKey 2.0 look like?
I mean, RealKey 2.0 looks a lot like what it looks like today. At the end of the day, we don't have any real competition, despite having paused last May. And so this shows you AI doesn't mean everything speeds up. And so when it comes to Doc AI, we're well ahead of everybody else. In fact, we
Hmm.
still have a video of the product that shows a demo, and it still holds true today. Same thing, there is nobody and nobody can unless they're a new incumbent, and it will take them years to build it, even with today's technology and a world-class team, to build essentially what we built, which was the smart deal room. And that's because you're bringing in all the different parties, title, escrow appraisers, real estate agents, etc. They don't want to log in for every bank. They want one login, one dashboard. So only a neutral party can do it. Same thing with the integrating with all the different systems. One of those companies try to do it. They can only address their current users. You can't address the whole market. And so RealKey 2.0 will look a lot like that. Really, the difference will be is that all of the integrations that we had lined up, all of the large contracts, again, integrations that we had lined up, those will get completed. And so at that point, you start seeing RealKey really expand very quickly with the right resources and capital in order to go through and really address the full market. And then
Right.
you'll also see it get into other parts of the market, get into student loans, auto loans, financial planning, wealth management. I mean, it's all the same concept, which is complex transaction with a lot of different parties and automating document collection, review, and communication.
And, and since you have a very strong imagination, 5 years down the road, what does the future mortgage stack actually looks like? Because I think you can predict.
I don't want to give away too much. I am interviewing for some particular roles and considering roles. This is some of what I would be bringing to them. And there's, a lot of concepts that are
Right.
pulled from, what we did learn during the time of RealKey, during my time with Syndio, and, when I was a top originator. So this is all kind of the culmination of all of that.
Right. Okay, so uh, you were also the part of Google's AI accelerator program. How has AI changed what's possible in loan processing? We have got now talking documents, risk scoring. What has actually changed in the era of AI?
Not a whole lot. I think and there's a reason for that. When I say AI hasn't changed much, specifically in fintech and mortgage technologies and real estate, at the end of the day, just because we have AI doesn't mean we know how to apply it. And that's the
Right.
biggest problem is that we have so much investment, over investment in AI without understanding what problem is it actually solving and does the market want it or need it and is willing to pay for it at the end of the day. And so you get a lot of AI being thrown around by individuals who are outside the industry that say, "Hey, I bought a house. I want to go through and do something in the industry." Okay, you don't understand the industry. Or, "Hey, my dad did it," or "I was a mortgage originator, but they hadn't done anything in leadership or understanding the full ecosystem." So I think that there is a lot of potential. Obviously, AI has potential as we've been applying it, but you have to also fully understand how are you going to leverage it and what value is it going to bring and what problem is it really solving before you're going to really see a whole lot happen from there. And I think it's also, you still have to understand it is a cyclical thing and uncertainty. The only thing we can be certain of is uncertainty until investors start actually really wanting to solve these problems, irregardless of the market. That's when you're going to see real changes when investors start actually trying to make change instead of going through and saying they would like to make change. They got to put their money where their mouth is.
Right. Okay, and you are in a really interesting phase right now. You have stepped into advising, consulting, and exploring your next operator role. What kind of problems or companies excite you now?
And what my sweet spot is, which is advising, consulting, being that one-man accelerator for incubators, accelerators, VCs, family offices. And so I think that that's where I get to work agnostically. I'm not just working in fintech and product. Granted, that's where I'm the most valuable as an advisor on a pitch deck most of the time. So for sure, and also just connections I have in the space. I've been doing everything from a lot of actually film studios to one-ton chip companies to this and that. There's a lot of fun companies I'm working with right now, and what I can help them to do is we've raised almost $300 million just since last June when I started doing this, and that was really kind of validation for me is saying, okay, well, clearly I could raise for every company but RealKey. And I can help these companies to grow and expand and seeing what they're doing. And, it's very enjoyable work for me. And I think that doing something similar, so if I'm looking at a full-time role, it's where I can really leverage it all of my skill set, where I'm not locked into just being, you know, strictly go to market or strictly sales or strictly product or any of these items. It's where I think that if I can go through it, it's fine if that's the title of the role, but as long as I get to work with everybody in some way and leverage that, skill set, that's where I think they're getting their money, and I'm also happiest at the end of the
Wow,
day. I'm not getting
amazing.
bored. Yeah.
Wow, amazing. Let's go with this rapid fire round. So you have to come up with one sentence answer. Okay.
Okay.
Um, a founder you really admire right now.
Oof. A
Don't tell me
found.
Elon Musk. Don't.
Oh, no, I don't like plastic cars, and I don't mind that we're on on record with that. So no, not him. I'd say most of the public ones. I do think we need to do a better job of being better people. At the end of the day, I don't think it's healthy at all that and I'll give you a longer answer. Apologies.
Yes.
I don't think that we should be glorifying evil, bad people. The whole "you're fired" thing. Like, why is that something that we see as leadership. That's not leadership that is going through and demanding power instead of earning trust. And I think that that's why so many people hate corporate America today. It's because when you look at the people that are running corporate America, there's a lot of evil people who've done a lot of very bad things to get there or come from a lot of privilege. And so I would personally value somebody that comes from a less privileged background,
Right.
that all of their staff love and appreciate them, and also the public adorns them.
Very insightful. Okay. An AI tool you can't live without.
In general, I think most of the AI tools, I'd say anywhere from ChatGPT to Gemini and so on. I love all of those products. I think that that has become something that I can't live without. In combination with, I mentioned Slack when I first got that tool in my hands. It's like, okay, where has this been my whole life? There's certain products where once you have it in your hands, um, it's product-led growth. That is where I love to be marketed to, where a product is speaking for itself.
Right. Okay. One biggest thing most founders get wrong about scaling enterprise SaaS.
Is that they focus on the enterprise instead of focusing on SMB first. You don't get distracted.
Right. Okay. A book or any podcast you would recommend to operators.
That one's a tough one. I would not say there's many books out there, personally. I do think that obviously Art of War is always a classic for everybody. There's a lot to be learned in that, but it's like anything, just like reading the Bible or any other religious, book. You have to, it's for interpretation, and are you interpreting for good or for bad? Um, Most of the evil in the world has been done based off those books, but a lot of good has come from them too. So again, depends on the person. I would say that that would be for as far as podcasts. I have like The Pitch is always a fun one. Uh,
Mm.
I do like just for news in general, NPR and The Indicator, as well as Up First. I like neutral. There's a lot of right and left, and I've actually been seeing this with friends and family who are on differentiating sides. And now that I've looked at the news, I can see it. I can see that there is definitely the news, unfortunately, these days is taking both sides, and people are not very good at fact checking in
Mm.
general. So
Mm.
I recommend doing fact checking yourself, but starting with a neutral party. Help use your AI tool and say, what are the most neutral news media organizations? So you'll be surprised. They'll actually give you a list. Try to cross two, three, four of them so that you have, truly all the AI's viewpoints, and then take the ones the most consistent.
Yep. Yep. That's a very good way to find the truth. One last one. So, one prediction for fintech by 2030.
I do think that, we are hopefully looking at going through and seeing a correction soon in the market. I do think that we'll see some corrections way, way overdue. And I know we've been saying this for a long time, but it's no different than, California earthquake. It's
Mm.
not a matter of if, it's a matter of when, and it's sooner than it is later based off of history. And I do think that at the same time, based off history, we're going to be a lot in the same place that we are today. Yeah, again, innovation change has to come from the top, and
Mm.
those with the power and the money to go through to do so. And then once you've gone through and it becomes established and people realize the value that it brings, it should just spread like weed. So hopefully a little more automation, hopefully we'll bring costs down. But if I do know anything about banking, uh, bankers like to pull as much money as they can out of it. So even if it's made cheaper, they're going to find other ways to make their
Mm.
money because they have to.
Mm. So, you expect a big reset in the banking sector.
I,
It's
I I think that at the end of the day, if we do look at specifically housing as a massive factor, if we look at private equity and large
mm.
family offices and corporations, the amount of residential real estate that these groups own today, and one good thing I can say that's come out of the current administration that we had already heard the Democrats were going to be doing it in the first place. I think all sides agree corporations should not own 1 to 4 unit properties. I don't care if you own a building and you're renting that out. But when you're taking away a single family residence, a duplex, triplex, quadruplex,
Mm.
1 to 4 units, residential, what Fannie Mae, Freddie Mac does, FHA, VA, USDA does.
Mm.
Large corporations should be penalized to a point for every single property they own over a certain amount so that it deters them from taking over the whole market. At the same time, we have also overseas investors, which I'm still surprised considering how the current administration views overseas, that they have not also restricted that. And then the last item would be, of course, short-term rentals, which is usually run by large corporations. Again, 1 to 4 unit properties. I think that once that starts getting corrected, and also we start seeing rates coming down, investors will want to put their money into different asset classes. At that point, we see just in general massive correction in not just home values, but I think across the board.
Right. Very insightful. Indeed. Your insights cut through the noise and reveal what's actually happening behind the scenes in fintech, AI, and lending. I know founders and operators will walk away from this conversation thinking differently and building differently. So, really, thank you very much for joining this session.
Oh, happy to be on the show. Thanks for having me, Ali.
Okay. And to everyone watching and or listening, make sure to subscribe. New episodes every week. See you next time.